Hello everyone. Today I will spend 4 minutes to introduce Fidelity's US dollar bond strategy. As financial markets focus on the US elections, the timing of the Federal Reserve's interest rate cuts, and a potential technology stock bubble, have you observed that yields on US investment-grade bonds currently far exceed dividend yields? We believe this makes it an opportune time to invest in this asset class. Why should investors consider US dollar fixed income in the current environment? We offer 3 reasons. Firstly, US growth remains under pressure. US consumers' excess savings have been eroded across the lower income groups as higher costs of living start to bite. The labour market also faces downside risk over the medium term as job openings are falling and weakness in small businesses hints at a decline in future payroll prints. Secondly, inflation has further room to fall. Inflation is on a downward trajectory globally, but has further to go as prices remain high compared to pre-pandemic levels. Service inflation has room to fall, and lower input costs are not yet being passed on to consumers. Lastly, since the US Federal Reserve halted interest rate hikes in September last year, the countdown to rate cuts has begun. With falling inflation, we expect that interest rates will soon be cut. The ongoing loosening of monetary policy will positively impact US dollar fixed income performance. So what does US dollar fixed income offer? US dollar fixed income asset yields remain high. Potential rate cuts and current yield levels make high-quality fixed income attractive. US investment-grade bond yields are now higher than equities dividend yield and are near levels last seen during the financial crisis. Moreover, when the US Federal Reserve halts interest rate hikes, there is typically potential for fixed income to deliver positive returns. Historically, after the last rate hike by the Fed, the overall performance of different bond categories was positive. In addition, in times of market turbulence, high-quality bonds offer the opportunity to diversify risk and potential for downside protection. Fidelity's US dollar bond fund offers investors a core-quality fixed income solution to capture these opportunities. The fund seeks to offer unbending quality with exposure to government bonds and investment-grade large-cap corporate bonds. It has a strong track record, maintaining no defaults in the past 15 years, and has a dynamic and flexible investment approach. The fund primarily invests in government bonds and quasi-sovereign bonds, and has an emphasis on overweighting high-quality corporate bonds compared to its benchmark. More than 90% of the portfolio consists of investment-grade bonds, predominantly with AA and BBB credit ratings, offering enhanced return prospects. Fidelity also boasts one of the largest credit research teams globally. They focus on credit selection and work with its asset allocation team, who also provide interest rate and currency views. Despite market upheavals such as the 2009 financial crisis, the fund has maintained a flawless record with no defaults over the past 15 years. Furthermore, the fund dynamically adapts its asset allocation in response to market cycles. For instance, spurred by fiscal policy changes in 2020 that bolstered risk appetite, the fund raised its allocation to corporate bonds to capitalize on profit prospects. In summary, the fund's 3 key strengths are its rigorous selection of high-quality assets, a top-tier team with a solid track record, and dynamic and flexible allocation to nimbly capture potential opportunities. This makes the Fidelity US Dollar Bond Fund a premier option for high-quality core fixed income investments.